Welcome everyone. I'm Julian Gordon. I'm the VP for Asia Pacific for Hyperledger. As most of you know, Hyperledger is the blockchain project hosted by the Linux Foundation. And through our open source, open governance approach, the Hyperledger community has created the world's leading blockchain code bases, providing solutions and changing the way businesses and I would say sometimes the world works. As such, in Hyperledger, we see a lot of innovation using blockchain solutions, and particularly today we're looking at capital markets. So I'm delighted to be here today with this amazing panel to discuss the development of creating fractional bonds using blockchain. This is very exciting. It's providing greater investor access to that multi-trillion-dollar institutional bond market with all its liquidity. And you will hear a lot more about that in a minute. One great example that we will examine is the launch of the world's first blockchain-based bond exchange in Singapore, which I think is a sign of the changing bonds landscape. Our panel is a stellar lineup of experts in this area. So without further ado, I would like to ask each of the panelists to briefly introduce them. And I think we'll start off with Rana.
Thank you. Thank you, Julian, and thank you for having me on this panel. A quick introduction, I work at Nomura in a capacity of a structuring or a product expert, and my professional work encompasses looking at FX, equities, bonds, fixed income credit, the entire gamut of the markets activities. And of course, being, so to speak, on the sell side, we're the industry experts, and we primarily cater to institutional investors. So that's kind of the background that I come from. But I'm also here perhaps in a different capacity, that of an individual investor, and I think that's really what excites me today about this particular panel, and then more importantly around this entire development, is that perspective of a buyer investing in bonds. And I hope through this venue to actually make this a more accessible product. So the interesting thing for us, of course, is it's disruptive to our industry. So in some ways, it's something that actually we expect will, down the road, no doubt cause consternation across the entire fixed income or credit space. But at the same time, it's inevitable. And the best way to deal with change is to kind of adapt it and be at the front, so to speak. So I look forward to hearing what the other panelists and you have to say and being part of the discussion. Thank you.
Thank you, Rana. So Raj, do you want to quick introduce yourself, please?
Sure. Good evening, everyone. And thanks, Julian, for setting up this panel. So my name is Raj, and I'm the co-founder and CTO at Bondi Value. I have a couple of decades of experience in technology, a lot of it in the financial services space, and a significant portion in capital markets. I mean, today we are at sort of a rare opportunity where we're able to take technology and especially with the advances that have been made with distributed ledgers and blockchain, and then create a disruption in a regulated capital market. And so Julian just spoke a little bit earlier about the world's first fractional bond exchange, and at Bondi Value, that's what we've been up to, and I look forward to also participating and listening to what other panelists have to say, as well as share a little bit of our experience as we go down this panel.
Thanks, Raj. Jonathan?
Yeah, hi. Great. Thanks, Julian. Thanks for having us on the panel this evening. So I'm John Horan. I'm a capital markets partner at Linklaters here in Singapore. My day job is traditional bonds, so helping issuers come to market across Asia, and increasingly looking at some of these digital platforms and digital innovations. We've been very lucky to partner with Bondi Value over the last year or so, helping them bring their platform to market. I guess, as I agree with Rana completely, that these changes and this innovation is inevitable, and we need to bring the legal structures and the legal approach to how bonds are issued and traded up to meet the technology that's available today. So I look forward to discussing that further on this panel.
Thank you. And we were going to have another panelist, Nadine Tachin from Citi, but unfortunately she's had technical problems, so we may have to do this all again at some point and bring her in. It's a real pity. But the first question I'd like to ask, as we discussed, right, I'd like to ask you all just a quick question around Robin. So how many of you have invested in equities or invested in equities?
Yeah, I'm active.
Right.
Yes.
All of us.
Yes. Jonathan?
And
Yes.
yeah, sure.
All right. So how many of you have ever, invested in currency or done currency trading of any sort?
Again, guilty, yes.
Raj?
As well, yeah.
Jonathan?
And a yes there. Yep.
Exactly. So I think we all know what the next question is. So how many of you have, bought bonds? So I'll start with Rana.
Yes, I have.
Yes. And Raj?
Unfortunately not.
Not. And Jonathan?
Unfortunately not.
And for me, I bought equities, I bought currency, but I've actually never bought a bond either, right? So why is that? I mean, the bond, in theory, is a less risky instrument. There is a people need that kind of instrument, right? So why is that, Rana? Can you?
That's a very good question, because exactly as you point out, the bond is a less risky instrument, and as the capital structure of any corporate goes, is actually much higher than equity. Equity is actually the lowest and the most risky piece, but yet everybody seems comfortable owning it. At the same time, I think if you really think of it, bonds really are doing the same function as what your CPF in Singapore does, or what you can call your provident fund or retirement or supra or whatever you call it in any other jurisdiction. It basically provides you a stable recurring source of income. I call it fixed income, but it's basically recurring income with less likelihood of losses. But to your question, why do people not invest in bonds? I think there are many reasons, and I'm sure that other people have their reasons. I think the fundamental reason is that the information availability is actually very low. Anybody can look up, equity prices on any internet website live, quite often actually, and trade that. But for bonds, that's not possible. And the other second big reason, I think, to me, that it's actually very uncommon is because the minimum sizes that regulations demand bonds be traded in generally are minimum in US dollars 200,000, and in Singapore actually it's 250,000 Singapore dollars. So that's the minimum size you can actually buy a bond for. You can obviously buy 255, but you cannot buy 245 dollars, right? So those two perhaps are the very, very big reasons. There are obviously a host of other reasons, I'm sure. But those are my two big reasons why I think they're not common. While actually it's a very, very large market. I mean, just this year alone, in just US dollars, we've had over $2 trillion of bonds issued, and that's far in excess of any equity IPO that actually has happened, frankly, perhaps over the last decade. So yeah, back to you. I mean, to me, that's the two reasons. I'm sure there are a few others.
Anybody else have an opinion or agree?
Yeah, I'd agree.
Sorry,
go Raj.
Go ahead, John.
I was just going to say, on the legal side, I think that the point about the big denomination, so the vast majority of work that we do in the space is focused on institutional investors, and so we deliberately need to structure them at that high level to avoid the kind of prospectus requirements that you have around the world. So there is a reason behind the denominations, but the point is that it does cut out a huge part of the market because we deliberately have to set those minimums at a high level to avoid other regulations.
Okay, so excellent. So I think we've stated that there is an opportunity for us to get access, for investors to get access with the denomination. There are other issues. So one of the answers seems to be fractionalizing bonds. So what is the opportunity there? Who wants to answer that first? Jonathan? So why fractionalization?
Yep, sure. So I think one of the great benefits out of fractionalization and obviously what Bondi Value has managed to do is to essentially break down those minimum denominations from a high level down to a much smaller level. So it does give the issuer the flexibility to break bonds down to a much smaller denomination, and therefore make it much more accessible to a retail or to a high net worth investor who may not be able to spend the 200,000 minimum, but may well be able to be much interested in buying at much lower level. So that's really the idea behind it. And what you can do once the platform and the system is set up is there's a lot of flexibility to choose existing bonds out in the market. So across the world, select bonds which are already trading, already have a liquid market, and break them down into the smaller amount, than have them available to investors at a much more accessible level.
Okay. So what exactly is it? Is it a difficult process to do that, to fractionalize a bond? So do we have any?
So maybe if I can jump in, I can explain on the legal side. So we are able to essentially you custodize the existing bonds, take them out of the market if they're in, say, the clearing systems like CDP in Singapore or Euroclear and Clearstream. We take those bonds, we put them in a custody account, and with the technology, we're able to create bonds, smaller bonds, fractionalized bonds on the blockchain, which represent a value of the underlying asset, which is that bond. So I think where the structuring hits the technology, it's really the ability of blockchain to identify those interests at a smaller level and have them the value actually track right through to the piece of the underlying bond, which is sitting in a custody account outside of the blockchain.
Okay.
Yeah, so I think the key thing, Jonathan mentioned this briefly, is liquidity, but I think before that it's actually fungibility. Now I'm speaking purely with a personal investment hat on. So I think to me there's a very wide market available out there. So what you can actually do in case of a fractionalized bond is you can actually buy a whole host more of bonds. The alternative to me currently would be to buy a fixed income mutual fund. But as we all know, mutual funds actually tend to carry fairly high costs. And unlike most of the ETFs that exist in the equity space, fixed income mutual funds are still expensive. They actually do charge quite a lot, most occasions, at least 1% running, which in today's low interest environment is a high cost in absolute terms. So what it does is it allows you to buy these bonds, but they're completely fungible with what actually trades in the larger market. So that's interesting because the difference here is that not many people may know this, but the SGX actually has retail bonds which you can buy in $1,000 clips even today, but they don't have any liquidity. And the reason they don't have liquidity is because there's not a lot of interest on it, and there's just 4 bonds out there that actually trade. Whereas obviously there are probably 40,000 or if not 400,000 bonds that actually trade in the institutional space. So something like a fractionalized blockchain actually allows you to get access to that liquidity pool of trillions of dollars that otherwise are supported by central banks or are supported by the largest institutional investors in the world. And now you are actually a part of the same ecosystem as they are, just like you are in the equity or in the FX market, which is why you buy equity or actually could trade currencies far more cheaply than you can actually in bonds. And then the other thing, the benefit of all this is diversification, right? In the end, any good investor wants to be diversified. And diversification just doesn't mean I'm buying a whole bunch of different equities. It actually does mean, and I'm sure people have heard this, diversification across different asset classes. And typically that's bonds and equities. A lot of people kind of go for that. So where does someone who's an investor get that bond portion of his bonds and equities at the moment? So that's perhaps one of the things that's actually exciting about this space.
Okay, and so what kind of investor we're talking about here? So we're obviously institutional investors are the people who market makers and others have access today, right? So are we talking about high net worth individuals? Are we talking about what smaller investors, or is it mom and pops? Who do you think will be able to get access through what kind of investor we're looking at? The new investors who can get involved, to fractionalize. So,
right. So I mean, maybe I will kick it off a little bit, and Jonathan, look forward to your views as well. But if you take a look at what Rana just said, right? you want to have a bond portfolio.
Yeah.
You want to have an overall portfolio of which bond is a section of that portfolio, right? And within that bond portfolio, you want to have it diversified, right? You want to have a diversified bond portfolio. Our research has shown that typically people who are able to afford investing in bonds have about 30 to 40% of their wealth in a bond portfolio, right? Now, if you take the minimum denom as 200,000, right, and just for just throwing a number out there, let's say that if you're comfortable with a diversification of having 10 bonds in your portfolio, right? If you do the numbers there, then you need to have a minimum wealth size of $5 million and above, right? So if you do the math now with $1,000 minimum investment size in a bond, right? And you work that upwards, so that's like $10,000, and then that's 40% of your wealth. So with $25,000 as your overall wealth, right? You will be able to build a really diversified portfolio with these fractionalized bonds, right? So you have like a 20x difference, and think of how broad that market then starts to open up for investors to be able to come in and benefit from this fixed income instrument that Rana talked about earlier, that everybody should have access to and should invest in.
I'll take that question as well, Julian, because one thing I just want to clarify, and this is perhaps me switching my personal hat for a more professional one, is that to me the space here is a little bit more restricted than what Rajaram just said, because really what we refer to as the fixed income bond buyers today are indeed actually that income bracket, right? That wealth bracket, not income bracket. But what the fractionalized bond probably does is it can take it down to the next tier of investors. And so in the banking space, what we are very used to calling just below the ultra high net worth or high net worth is the mass affluent, the people who actually are financially savvy, people who have a wherewithal of between $500,000 to $1 million of wealth, but at the moment actually are missing this diversification in their portfolio, or feel that they could do with the ability to have more choice. But that's a very, very large pool in Asia. So if you actually, while wealth may be concentrated in a few hands, undoubtedly, the number of people that actually have access probably is 1%, maybe even less. But the next year, this wealthy affluent households is actually much wider. It could be 20% of the population. So the impact you're talking about as to who gets access or who should have access is 20-fold the access of what's available today. But I still don't think that it's quite ready for the equity size, just because perhaps it's not been tested enough. I don't know what the legal piece around it might be. I don't know if that differentiates.
Yeah, no, it's a good question. So, and I think that's right, Rana. I think ultimately the commercial aim is to make this as wide as possible. And in some certain circumstances, you may be able to tap retail. And a good example would be there are exemptions in Singapore around sovereign issuers. So they would not need to comply with the higher level of prospectus requirements if a sovereign wanted to come in and issue on a platform like BEV. So there are opportunities to expand that universe, but I would agree with you that right now, as the immediate opportunity is that mid-level investor who will probably satisfy some of the requirements around, they'll be above retail, they'll have a level of investment, but not at the institutional level that we're accustomed to dealing with in the bond markets.
Okay, excellent. So it's that kind of mid-market, but it's a spreading market. It's people who can afford $1,000, right? Which is a lot easier than people who afford 50 or 250,000. So why is so we talk about fractionalizing bonds. So why? And I think I'll point this to you, Raj. So why blockchain? So why is blockchain so essential to make this happen? And where does it fit in?
Right. So if I were to start off where Rana had spoken about the fungibility, right, to start with. If you look at it today, right, again, Rana just mentioned the size of that the new issuances last year. And our own data as well, if you take the Asia Pac minus Japan, G3 market, right? There was about $350 odd billion. This was in 2019. We're collecting the data for 20. It's not yet over yet. And then there was $600 billion in secondary trading, right? Now, for us to take the most liquid, the high credit rated of that, right, and make it available on a platform for a wider set of investors to be able to access, you need to have firstly that dual fungibility, right, that Rana talked about. And I think first thing that the blockchain does is it creates this trusted network. And as John mentioned earlier, you're essentially taking that wholesale bond from the current depository or clearinghouse and then getting it into a custodian for body value, right? So having the custodian and having the members as part of a network, right, that is distributed, but is also everybody has the same copy of records, right? It creates that trusted network. I think the second thing with blockchain, which what it does, and it's very less talked about, right? And is that it makes the communication between multiple parties in this completely seamless. So what I mean today is like when you do a trade today, right? You have to send out confirmations to multiple parties in that cycle, right? So the clearinghouse, the depository, the custodian, the exchange itself, the members themselves, and so on. This is kind of today like a potentially bunch of different protocols. I'm going a little bit technical here, but it's a bunch of different protocols, different message formats into different systems, right? That's where you see a lot of lag in settlements and such. With the blockchain, it's one protocol. Everybody has the same ledger, but it's not centralized. It's distributed, right? And the messaging is uniform. It's consistent, and it's all taken care of under the hood, right? And therefore, you're able to get to where today, for example, we're able to do that the entire settlement in T plus a few seconds, right? So T plus 0 is what we say, but T plus a few seconds. And so I think that again adds a lot of reasons or rationale for us to use blockchain. So the communication, the trust, and of course, when you fund in the bonds or when you want to fund them out, then all the participants are on the network and it's trusted. I think that's for me the big set of reasons why a blockchain helps in fractionalization of bonds and potentially any other assets.
So actually, I have a question for you, Raj. So what happens with the cash part? So the bond settles T plus 0, but will the cash move just as rapidly as that?
If you think of it fundamentally, everything is on a ledger, right? So today, even when you do cash transfers, right, you're doing it like over a Swift network, bank to bank, and so on, right? There's no physical transfer. So if you think of it, it's in two different ledgers in that case, right? So in our case, the cash that comes into us and that's lockbox with us in the same way that the bonds are again instantaneous, right? So you have to think of the fungibility. So you're bringing in cash into the system or taking it out, but once it's in the system, then it's all in the same cycle as the bond. So the bond exchange hands and the cash exchange hand as well. And this is a good point because in the traditional systems, bonds and cash also follow different protocols, right? When you're settling, you kind of have to wait for cash separately on a separate set of protocols and on bonds separately, right? And only when everything is done, you can actually confirm. Right? Here, that's not there. It's all of them happen instantly.
Okay, excellent. So where are we today with bond value? Where are we? You've told us why and something about the settlements but where are we today?
So we just went live earlier on under the MAS sandbox. And then we're very happy to say that we graduated out of the sandbox with a full RMO license starting this October. So today we are live. We have our initial launch partners. We have, we have one of the largest brokerages in Asia. We have other multiple member participants being onboarded as we speak. We see, so we are in the starting stages of this, right? But we made some great progress. We have been able to issue corporate actions coupons via the blockchain on the network. So we have exercised a number of different things that are important to being able to successfully trade, manage, and custodize bonds, even in their fractional form. So I would say at this point, very excited. We are on, we're still in the, I think we're still in the early stages of our evolution, but we have a platform that's up, running, a lot of interest, a lot of new member participants joining us each day, and it's poised to take off.
Okay, that's excellent. So is there, I think you've described it, but obviously setting up an exchange is not easy, right? There were a lot of steps. You came out of a sandbox. I mean, does anyone else talk about some of the, maybe the legal, regulatory, other things that you have to consider in making such a big, big stake and things as creating this new exchange? Jonathan, do you want to cover some of that?
Yeah, certainly. I think just a few points on that. So absolutely, the RMO license was a big focus. The MAS has been fantastic in engaging throughout the process and understanding the platform. So I think it is a huge benefit to be based here in Singapore and have that dialogue and support with the regulator. The other area that any type of platform like this needs to satisfy are the nuts and bolts. So what do you need to create a bond? So there might be a register, bond certificates, transfer certificates, those type of legal essentials, which no one ever really cares about. You need to make sure that digital security fits within the existing Singapore legal structure. So, and we've been able to do that with BV. I think that's probably one of the reasons that Bondi Value does stand out from other similar projects, is that we have gone the full, we have taken this the full way to being comfortable that these are enforceable securities sitting on the ledger. There's a lot of other projects out there trying to do similar things, and everyone's got different approaches and benefits. But we're very comfortable around the legal enforceability of the platform, of the technology, and it is very specific to the BEV technology and the DLT. You need to look through how it works, how it fits within the existing regulations.
Yeah, I do want to add one more thing. Oh, sorry, go ahead, Rana.
Yeah, sorry. That actually, just hearing Jonathan say that. So it's blockchain, and so is it like a digital asset, or is it a bond, or is it like Bitcoin, or is it still a bond?
So it is. They're debentures under Singapore law, so they are a bond. It's just that we've been able to replace some of that sort of documentary evidence, which we would ordinarily have in the traditional world, that is represented by the ledger.
And just technically speaking, these are completely pari passu to the same issuance. There's no difference if you own a blockchain-based fractionalized bond, if you own the actual I say, but the institutional level bond, right?
So it's a pass through of that entitlement, but it's the only way that it's truly fungible is if you were to be able to buy a large enough bucket of the bond blocks to then exchange for the underlying bond, which is sitting, the traditional bond that's sitting outside of the system. So it's right to say that it's a pass through and the economics are the same, but I pause at saying it's fully fungible because it's a much smaller version of what is outside of the system. So what you could do is go and, the investor that's sitting on the BEV platform has the ability to go and, buy a 200,000 piece of bond blocks to then go and exchange it for the underlying bond. And it is, as the platform develops and grows, that switching between, Euroclear and BEV is a feature of the platform that you would expect to get traffic both ways. So you would have investors wanting to switch from the traditional bond into bond blocks and vice versa.
Understood.
Yeah, I wanted to add a couple of things. I think one is, when we look at how we have achieved this and we think of the technical side, right, we often forget the legal and regulatory side of it. And that journey, I think John just talked about it. And there's a lot of work, probably equal or even more amount of work that has gone in on that front to be able to get to where we are. The second part is that also on the technology front, right, we use the Hyperledger Sawtooth platform, right? And we have been sort of fortunate in that this technology has evolved so rapidly. At the time we started it, right, started working on this from a technology perspective, we were sort of in the pre 1.0, which is like, generally available release version, right? And then last year it went into 1.0. So we were, timing wise and in terms of the pace of evolution of the underlying blockchain technology as well, it helped us get to where we are. And that we are seeing across the board, which is why more and more blockchain projects, I think, are finding legs, getting productionized today as well.
Okay, excellent. So it sounds like there's a lot of things that need to be done. So where do we go from here? It looks like we're at the nascent kind of start, bond value. So where do you think, what are the opportunities? Obviously, we're starting with I think we started off just with a few bonds. So where do we see the future in this market? Is it across different types of bonds? Is it, where do people see things going from here? And what needs to be done? Sorry, big questions.
I can kick start it, right? Okay. So in general, what we've seen is on bonds itself, there have been a few projects that have been focused on issuances, right? And they have kind of gone live in the past. So if you take two areas, there's issuances and then there's secondary trading, right? We came in from the perspective that we have to create a healthy secondary trading bond market, which is supported by already highly liquid existing bonds of really big trading volumes and new issuances that happen year on year. So our initial focus on this front was to get focus on, let's say, amongst those, right, pick up 50 bonds that are highly liquid, have highly reputed issuers with high credit ratings. And if you just look at that itself is like $50 billion of already issued bonds, right? So there's like a big slice of market that's available for us to get to, and this will continue to grow, right? I think opportunities in general exist on the issuance side as well, right? And so far on the issuance side on blockchain and fractionalization and such, it's been there have been a number of projects that have happened. They've gone live, but they've been at very low volumes, right, in the tens of $millions, more to kind of test and see how things go. So I think there's a lot of opportunity along that direction as well. So as we go forward, I see I see more secondary trading volumes. I'm talking general, right, not just only value, but I also see like a lot of traction coming on the issuance side as well.
I can think of it like in two ways, right? So from a professional perspective, looking in, the market really only takes off when you actually have more participants, right? That's the case with any market. Obviously, that includes investors who are both buying and selling, but it also includes, in the end, the broker-dealer community that actually will make a market, so to speak. Somebody who stands in the middle and actually buys and sells when there's no obvious buyer and seller, and hence actually gets a pricing handle on it. So that's required, and I think clearly I think that for bond value, but for any exchange market makers is essential. But the other side of it is that bonds are not that volatile. I say that with caution because 2020 they were very volatile. But in general, bonds are not that volatile, and hence it's not that difficult an ask. But if I switch hats and kind of say, okay, as a personal investor, when does it get interesting for me? Is really when I see a lot of the 50 bonds, right? If they start trading and I actually start seeing there's a good bid and a good ask, right? So most of us, again, because perhaps again none of the other panelists have actually bought bonds. Bonds trade at a very wide bid ask, even amongst institutions and very high net worth individuals. Paying a percentage of brokerage in the bond market world is actually not unheard of, and certainly 50 cents or thereabouts is actually the norm. If you compare that to equities now or even currencies, I mean, 0% is quite usual. Most people get away with paying 1 or 2 cents. So there's a huge amount of costs and charges that actually gets put through, which is why it's inevitable that it gets disrupted because the spreads are too wide. So to me, as a personal investor, I think it gets very interesting when I actually find other investors who are willing to buy what I want to sell, and vice versa, right? Other investors who want to sell what I want to buy, and the more easily I can buy and sell that stuff, then that gets very interesting. And maybe finally, as Jonathan said, eventually, if it trades in enough volume that you have cross fungibility where bonds are coming off the Euroclear clear streams of the world or going back on as they reconstitute or deconstitute these fractions, that becomes even more exciting. So moment that happens, I think or even before that, the market would have fundamentally changed. Between here and getting there, it's anyone's guess. I mean, at this point, I think it's going to happen. How long and by whom is the other question, right? Because as Raj mentioned, I mean, the big banks, like the big American banks, have already gotten together and actually made a electronic, I think it's blockchain backed, but it's a platform nevertheless. It may not be blockchain backed, where they will announce new issuances. And then after that, and this is to what Jonathan does, I mean, and then they will actually have the ability to potentially down the road allocate or syndicate, as we call it. So that's happening, right? So that's happening from the top down, meaning that the guys who already do it are kind of driving their own change, and Bondi value driving the change, perhaps bottoms up, looking after the retail investors. So somewhere in the middle they'll meet. I don't know when.
Excellent. We're coming to the end now, so I'm going to have to wrap up a little bit here. So I'm going to ask just a quick one lightning or maybe 2 lightning questions, right? So ask each of you. So out of a mark out of 10, so between 0 and 10, 10 being good, how far are we on this journey in providing comprehensive access for retail investors to the global bonds market? So Rana, how far are we out of 10?
I think 3. The seems like, from what I'm hearing, the tech, the platform, the legal framework, which is so important, exists. Okay. So you need the other pieces, the liquidity, the investors, and the depth of the market.
Okay. So you're a 3, a cautious 3. So Jonathan?
Can I be an optimistic 3? I think we are very, very much in the early days of this, as we've said, but the technology is there. BD and others are proving that it works. Another interesting angle to it, Rana was talking about the investor side and the underwriters. The other thing that we're starting to see more and more on the issuer side, everyone's got these debt programs set up. They do their MTNs, drawdowns, and that's what our day job is, helping issuers do that. But actually more and more discussions are around how do we fit digital issuance and digital trading into these existing platforms. So if you think about it, that's the supply side. So once issuers are coming and saying, we want the ability to issue onto Bondi Value or another digital platform, that's going to be where the supply, the issuer side, and the investors start meeting in the middle. I do think it's, I think we're in the last 12 months, we've started seeing projects go live, institutions and market participants recognizing the opportunity. I think the next year or 2 is when we start seeing the critical piece, which Rana's touched on, is liquidity and access and building that ecosystem.
Okay, Thank you. Optimistic 3. So Raj, what are you?
I think my fellow panelists have kind of pulled that number almost out of where I was at as well.
Yeah.
I didn't. By the way, I thought they were going to say 4 or 5, right? But I think we are in that. I was going to say 2.53, and I thought I looked like the bad guy. But here's what I think, right? I think the first 30% of that scale, right, in anything, right, and then the last 30% of that scale is always the toughest. And I think we are kind of, because you need to build the underlying platform, whether it's tech, regulatory frameworks, legal frameworks, whatever else it is, right? So now we are in that portion where I think we've hit that first 30%, right? And so you have the platform, you're ready to take off and launch, right? And I think, to kind of disrupt the overall bond markets and get to where volumes are, that will be the final 30%, which will again be like a hard battle. So I think we're kind of one of the first of the hard battles, and I think there'll be a period of consolidation and growth. So I think we are at. So I give it a 3 as well.
All right.
But there are things that you can do to kind of accelerate that, I think.
Yeah.
Sorry, I didn't mean to interrupt, Julian.
No, go ahead.
Yeah, no, I was going to say, I mean, I'm just thinking, right? So there are obviously ways that this can accelerate. I mean, one way certainly could be if you have an issuer that's in high demand that actually comes and, chooses to issue on the platform, basically to create that inverse demand, right? So instead of, people wanting to buy and sell, you have an issuer wanting to issue, and hence people have to get onto the platform to actually consume that issuance. So that's one way that actually can happen. Or the other could be also if you have a theme. Let's say you have a social project or an environmental project, and again that is available only on body value, or it's available in good size, and it could go viral, right? So if anything else, I mean, a lot of these things have the propensity to take off very quickly. It just needs some catalyst.
Okay.
And it's tough to predict, right? What the catalyst could be. Yeah.
Right. Absolutely, Rana. So I think exactly. We are at the point where with the catalyst, right, we can take it from 3, and hopefully if we talk about this next year, right, we're somewhere at the 7, right? Let's see if we can reconvene as a panel a year hence and what our numbers look like then. But I think Rana's point is absolutely valid. So we are at a stage where with a catalyst, it's hitting that 7 is not going to be difficult at all.
All right, so it looks like the stage is set for us to go from a 3 to a 7 in a year, right? Well, there's a challenge. So I think I'm going to wrap up here. So that challenge is for anyone out there who's watching here. Please get involved. I think this is an exciting area. At Hyperledger, we actually do have a special interest group. So we around capital markets. There's something we can discuss there. Go and look at bond value, explore those different options. Just go out and learn. There's a lot of stuff out there, and I think here everyone's very happy to help you get to understand more about this great opportunity. So I think I say thank you, Raj, thank you, Rana, thank you, Jonathan, thank you, MAS, Ubin, for hosting it, and everyone, keep safe, take care, cheers, thank you all.
Thanks, everyone.
Thank you.
All right, thank you, everyone.